Here's the thing, joint mortgages aren't new. In fact, a lot of married couples have used them for many years to get approved for a mortgage to be able to buy their family home. Now, what is new is that more and more first-time home buyers are using them even if they're not married. So they're getting these with their significant other, and there's certainly pros and cons that should be considered when getting a joint mortgage. So in today's episode, we're going to talk about the pros and cons of a joint mortgage to help you make a smart, well-informed decision and if it's right for you. My name is Andrew Finney, your real estate geek. If you need help finding a top agent where you live, or if you simply want to drop me a line to say hello, my contact info is below. If you're new here, please go ahead and subscribe to this channel now, like this video, and tap the bell icon to get notified of the next one. Okay team, let's take a closer look at this. If you're married, or even if you have a significant other, you're probably really thinking, should one of us be getting approved for this mortgage, or should both of us be going on this mortgage? And what are the pros and cons that we should be considering to know if this is going to be a smart decision for us? So let's go ahead and get into it with a pro. Now, obviously a pro is if you have both incomes going into a mortgage application, you're going to be able to get approved for more home. That could be the difference of getting the school zone that you want, the bigger house that you may want, or being on the side of town that you would like to be on, or perhaps simply a better view. Now, there are other trade-offs with that, because with more money comes more buying power, but also what has to be factored is the fact that the lender's still going to look at both of your debt to income ratios with an overall balance of money. So let's say that your combined incomes were like $10,000 a month. Very good money, right? And let's say your total debt obligations are $4,000 or $5,000 a month. So as a factor of a debt to income ratio, that'd be roughly 40 to 50% debt to income ratio. But what if only one spouse, let's say the spouse that earns $6,000 a month, only has maybe a $500 a month debt to income ratio? Maybe you can qualify with that amount to get the home that you want. At the end of the day, you need to talk to your local loan officer and see how this is going to play out for you. The single biggest reason that a lot of people enjoy getting a joint mortgage is to qualify for more of a mortgage so they can get into the place they want to call home for many years to come. Now, joint mortgages do come with some cons, so let's take a look at that. First of all, you're going to have both of your credit reports pulled, and both of the credit scores must qualify. So if you look at it, you're going to apply for a mortgage jointly. The lender is going to review your 3 credit reports. They're going to review your significant other's 3 credit reports. So a total of 6 credit reports are going to be looked at with the middle numeric credit scores that must meet the lender's qualification standards before your loan application will be approved. So if your credit's really good and your significant other's credit's not so good, that could actually harm the process of getting a loan pre-approval. Or if you can qualify jointly, then maybe you'll have a higher interest rate. Now, that's a trade-off that you need to be prepared for, and it's a conversation you need to have. If it's in between the interest rate and getting into a home that you really want, that's a really good consideration and a really good question to have with you and your significant other, and ask yourselves honestly, what's more worth it? The house that you really want at the price that you can get together, or maybe a house that you can get on with one income and maybe you get a better interest rate? What's more attractive to you, and what's fitting with your long-term vision together and where you want to live? That's what you need to consider. That's something that you should be real about and definitely ask each other. The second con is that both of you are at risk of a credit damage if something went wrong with that mortgage. Now, let's say that your joint mortgage was approved. That's good. You got into the house that you want. Everything's going along swimmingly. Now, let's say that something happened and you missed a payment. What's going to happen next is that both of your credit reports are going to be dinged, not just one. So both are going to be taken into account. Both are going to be dinged on that. And if you default on a joint mortgage, that's something that's going to follow you both around, even if you got a divorce into the future. And that's kind of a scary proposition. So you need to consider this wisely and if it's best for you. The third con is that you're both liable for the debt. And even though none of us will ever plan for a breakup or for a divorce, it does happen. And if it does happen and you're jointly tied to a mortgage loan with your spouse or significant other, separating that debt after the fact can be a very tricky process. So there's some different things that you can consider. I'll go ahead and toss them out for reference so that you're aware of them. In the event that one of you walk away from the relationship or a divorce has happened and you guys say, hey, you know what? If we're married, we're done. If we're significant others, hey, we're done. And you want to get the heck out of Dodge, you're both still going to be equally liable for the debt. So a mortgage would still remain on both of your credit reports and both of your names until a couple of things happened here. One thing that could happen is that the person that's keeping the property could refinance that loan into just their name. That would exonerate the other person that was on the credit report, leaving them free and clear to move on with their life and go on their own path, while the other one still has the home and now the debt is only in their name. The second thing that you can do, and it's pretty common that a lot of people do whenever these situations occur, is they simply sell the asset. The asset in this case being the house. So when they sell that, then they both normally will split it out 50-50 or whatever was agreed upon them. If they had to get divorce attorneys or judges involved, then they'll be splitting it out as they have agreed to do. It's important to note here that it's easier to get a divorce from a spouse than a divorce from a creditor. I know it sounds a little bit funny, but it is so true. So you need to be ready. If you don't need 2 incomes to qualify for a particular mortgage loan, it might be a good idea just to take out one in one name and consider maintaining the credit independence for the other person. Both spouses can still be on the deed even if only one spouse is the liable party, and the bank doesn't care who's going to make the payment. So both of you guys can work it out together as a couple. So I mean, it's up to you if you can qualify for the home that you want and you guys are going to be comfortable with that based upon one income. Great. If you need both incomes, now at least you know the pros and cons that you should consider and make sure that you're making a smart and well-informed decision at the end of the day that's right for you. Okay, so now that you know what you can do with the joint mortgage and some of the pros and cons, here's what I want you to do. Tell us what you're thinking about this episode in the comment section below and share any experiences that you have with the joint mortgage and your advice with us in the comment section below. Let's learn and grow together. Thank you. Now I'm going to go ahead and pop up my contact information. If you simply want to drop me a line to say hello, or if you need help finding a top agent where you live, please let me know. Always love to hear from you. Always here to help you. If you haven't already done so, I'm going to ask you to do 3 things. Number 1, please subscribe to this channel. Number 2, please like this video. Number 3, please share this video around with someone you know is going to be able to help, because I'm sure that you can think of someone else right now that's wondering, should one of them get a mortgage or should both of them get a mortgage? Share this video with them so they can make a smart and well-informed decision together. Thank you. In between now and next time, I'm wishing you and yours a lifetime full of love, wealth, abundance, and happiness. Thank you for watching today, team, and enjoy an amazing day.